Rick Santelli standing by at the CME in Chicago. Rick, the number, sir.
Well, let's start out with Empire. Empire's November number expecting -6, much better than expected, up 4.5, up 4.5. Up 4.5 actually is the first positive number since July. And in July, it was well above. It was 11.1, so that's nice. Here we go. Our October read on Producer Price Index month over month, up 0.2%, half of what was expected. Remember, the high water mark for all the metrics I'm about to give was in March of this year. High water mark there, 1.7%. Now, if we look at ex-food and energy, zero. We're expecting up 0.3. And this, by far, is maybe one of the bigger surprises. Up 1.3 in March was the high water mark. If you strip out on a monthly basis, food, energy, now one more trade, it's up 0.2. We're expecting up 0.3. High water mark there in March was up 1%. All right, the year-over-year numbers, in my opinion, the most important. Year-over-year headline up 8%. That is 0.3 less than the 8.3 we were expecting. It's a 0.5% less than the 8.5 in the rearview mirror, and 11.7 was the high water mark. Strip out food and energy, it's up 6.7%. That's a 0.5% below expectations. It's a 0.5% below our last look at 7.2, and it's well under 9.7%. 3 percentage points was the high water mark in March. And finally, the last year-over-year ex-food, ex-trade, and ex-energy up 5.4%. We're expecting up 5.6 in the rearview mirror, 5.6. 5.4, of course, high water mark there was 7.1. We are seeing some light revisions trickle in. I should highlight them. On the headline number, up 0.4 last month now gets cut in half to up 0.2, which really, in a way, shouldn't take anything away from this month. It should just spread it out more aggressively. If we take core, it was up 0.3. It's now only up 0.2. The rest of the revisions aren't that big a deal, actually. And if we look at what's going on with regard to yields, well, we're at 377, approaching 3 3/4 on a 10-year. It's now down 8 basis points. It's at a 1.5-month low. Should it close here? And as we look at the dollar index, which continues to fall, it is basically at a 3-month low if it was to close here. And it is on the move as we speak. These yields should drop. And anybody who's making the case, hold on, this doesn't mean the Fed's going to change course, doesn't mean the Fed's going to pivot. You know what? There is a world outside the Fed, and there are a world of facts that are probably outside the Fed's mind because nobody knows the future. In the end, it's about what was priced into the markets, what now is being repriced into the markets, and the fact that on CPI last week we ended up with one of the strongest stock rallies in history isn't lost on investors who seem to be lining up today to have a repeat performance.